Hello and welcome to our Oz Trader Chat. Oz Trader Chat is the first one of our breakaway Trader Chats. We have our regular Trader Chat, of course, on a Wednesday afternoon, European time, and to make Trader Chats accessible to more people in other areas of the world, we have started breakaway chats, and Oz Trader is the first of our breakaway chats. So welcome everyone to today's Oz Trader Chat. Let me see if I can get this this program working. I can't seem to turn the page. There we go. Okay, well, let me go out of full screen, and the problem is I'm on the last page, which is always right. First of all, as always, I need to present our disclaimers, which are a legal obligation. The first disclaimer tells us that all trading involves risk. Please be aware of and accept this risk before trading, and never trade with money that you cannot afford to lose. You should also know that past performance of any trading methodology is no guarantee of future results. No representation is being made in this webinar that any account will achieve profits or losses similar to those discussed, and you should also know that all results should be considered to be hypothetical unless otherwise specified, and that hypothetical performance results have many inherent limitations, and unlike an actual performance record, do not represent actual trading. Alright, a few pointers about using NetViewer for those of you who are new to Trader Chat. The first thing you should know is that the best way to ask questions is to type a message into the chat window. If you cannot hear me properly, check that the speaker slider in your VoIP tray is far to the right-hand side, which increases the speaker volume. It increases the volume of NetViewer separate to your system volume. If you'd like to speak to me, then right-click, and also please enter a chat message to say that you would like to speak to me, and I can open up your microphone. There is a bit of an audio delay. Speaking of mouse clicks, please be careful of mouse clicks because they pop up brightly colored arrows and speech bubbles on the window, which can be a little bit distracting. Okay, there we go. Those are the legally obliged disclaimers and our sort of housekeeping up at the beginning. So without further ado, let me switch to Sentient Trader, and let's start taking a look at the Australian market, which is, of course, the focus of the Oz Trader Chat. So I'm going to be speaking about cycles that are playing out in the Australian market according to the analysis that's been performed in Sentient Trader. If at any point you have any questions, please pop them into the chat window, and I will do my best to answer them. The format of these Oz Trader Chats is fairly informal. I'm going to be talking to the charts, if you like. I'll be discussing various aspects of the analysis and talking about where I think the Australian market is going. I'm also in today's Trader Chat going to be comparing the analysis of the Australian markets with an analysis of the American markets. Because something fairly interesting has started developing between the Australian markets and the US markets over the past 2 or 3 weeks. There's been a bit of a divergence, which is usually a warning sign, and I think it is a warning sign at the moment. I think you need to be careful out there in Australia. Because of a divergence that has developed between the Australian markets and the US markets. So, again, if you have any questions or you'd like anything clarified, don't feel shy. Please put a question into the chat window, and I will do my best to answer those questions. Right, so for those of you who were with us in our last Oz Trader Chat, which was 2 weeks ago, some of this information, of course, I'm going to be repeating as I talk about the bigger picture of what's happening in the Australian market. So I hope you will forgive me if I repeat myself a little bit. But it's always important when starting to take a look at an analysis that the first thing that one does is one takes a look at the bigger picture. So you will know that I have loaded in Sentient Trader data for the Australian Stock Exchange Index, ASX, and this is it here. Let me zoom all the way out, and you can see I have data going back to 2002, and I've performed an analysis using Sentient Trader. There's something fairly interesting to point out about this analysis, and that is that I have defined an analysis period, which means that I have told Sentient Trader to only look at a particular region of data, a particular period of data, in performing the analysis. And I've done that in order to get what I believe is a slightly better analysis than the default analysis. Now, we spoke about this 2 weeks ago and 3 weeks ago, and those trader chats are available for download. So you can, if you weren't with us, you can download those trader chats and you can hear all about it and learn all about it. But for now, I'll just point out that, as you can see, I've defined the start period of this analysis back here in 2004. The reason that I did that is that when I then run an analysis in Sentient Trader, what happens is that Sentient Trader places this very prominent 4.5-year cycle in 2009 at this very prominent trough. I believe that that is more appropriate when analyzing this particular index. As you will know, if you've been coming to our trader chats on Wednesdays, it differs from my opinion about the US market at the moment, and if you read ST Outlook, you will know that that again it differs from my current favorite analysis on the American markets. I believe that when analyzing the markets, one has to keep a fairly open mind, and one often has to bear in mind that it's possible that the two different alternates are playing out at any one time. And I think at the end of the day, either my US analysis long-term will be proved right, or my Australian analysis long-term will be proved right. It doesn't matter to me very much which one it is. And in fact, in terms of making trading decisions, it also doesn't have very much impact either. So I continue to follow this particular analysis in the Australian markets, but it's useful to bear in mind that it differs slightly from the analysis in the US markets we've been looking at. So this is the long-term analysis. A useful thing to do when looking at the long-term analysis is we've put up those semicircles, and I can zoom in, and the semicircles show us very clearly what the analysis is telling us about what is happening in the market. As you can see, the longest cycle that has been found in this particular analysis is the 4.5-year cycle, what we call the 54-month cycle, which experienced a trough back here in 2004. Again, one shouldn't take that trough too seriously because it's right at the beginning of our analysis. It happened 8 years ago, and so the exact placement of it could be debated, but it would be a waste of time for us to do that at the moment. The first 4.5-year cycle took the market up, as you can see, to a peak in 2007, and then brought the market plunging down to a trough down here in March of 2009. And you can see the sort of rough movement of that market by simply taking a look at the orange-colored semicircle, which moved up and then it moved down again. Okay, that shows you what happened with that 4.5-year cycle. Since March of 2009, of course, the market has been bouncing up again, and it then formed a peak somewhere around about 2011, or possibly an early peak in 2010, and it's now heading downwards. So that means that according to this analysis, the 4.5-year cycle is presently heading down towards a trough, which is expected to occur sometime early 2013. Okay, that's the 4.5-year cycle. It's a very long-term cycle, of course, and so I notice Cheryl, I think you're saying hello to somebody, and you've sent it to me personally, which is very kind of you, but it's not your message is not reaching the person that it was intended for. So that's the 4.5-year cycle. That's what's happening in terms of the long-term picture. Now, the 4.5-year cycle, of course, Hurst's cyclic principles state that the prices of financial markets are moved by an infinite number of cycles. Okay, we can't possibly grasp an infinite number of cycles, so we concentrate on only a limited number of those cycles. Hurst recommended concentrating on up to 11 cycles. In this particular analysis, we are looking at only up to the 4.5-year cycle, so I think that's about 9 cycles that we're considering in this particular analysis. Now, a good way of taking a look at an analysis is that you start with the longest cycle present in the analysis, and then you look at the shorter and shorter cycles. So what's the next cycle shorter than the 4.5-year cycle? Well, it is, according to Hurst's cyclic model, which is simply a list of cycles present in the market. According to Hurst's cyclic model, the next shorter cycle is the 18-month cycle. There are 3 18-month cycles that play out within every single 4.5-year cycle, and there you can see I'm drawing the expected sort of bounce there of the 18-month cycle, and you will see that we are presently in the third 18-month cycle of the current 54-month cycle. Okay, so let's zoom in and have a look at what has been happening in that cycle. And let's zoom in like that, change my resolution to daily. I turn off my semicircles when I zoom in because I find those semicircles a bit distracting. Okay, so what has been happening in the most recent or in the current 18-month cycle? Well, first of all, the trough of that 18-month cycle, I believe, occurred in